Okay, credit control. First of all, what is it? Well, it's to do with managing how you sell your products or services and how you get paid for those when you invoice people. I think there's two areas that basically we'll be looking at. The first is, what's your overall policy to manage your credit situation with your customers? And secondly, what do you do if your customer's not paying? How do you chase those debts? Credit control starts before you actually sell anything, because you want to put an overall policy into place. So first of all, set credit limits on each customer, unless it's a very small sale where it just isn't worth it. Set a credit limit, and you can get help with this through online credit reference agencies such as Experian, Equifax and First Report. Consider whether you really need to give credit, and if you do, how long it should be for. Should you have a standard policy of, say, 7 days, 30 days or 60 days? Again, it comes down to working capital management. Try and work out what is best for your business and what will work within your sector. Make sure your terms and conditions in your orders are right and on your invoices. It's good policy to actually send out a list of your terms and conditions before you even sell anything to a customer. Get to know the person who makes the payments. If you know them personally, if you can talk to them, pick up the phone and say, is Bill there? It can be a lot easier to get payment later on. Consider sending monthly statements to customers as well as doing your normal invoices. You may raise perhaps 7 invoices a month to an average customer, so it's probably worth sending a monthly statement just to remind them that their payment is coming up. And equally, it may be worth actually phoning just before a payment is due, just to ask, is everything okay with the invoice? Are there any errors? Is there anything you want to talk to us about? Can we expect payment on the normal date next week? You could also think about factoring or invoice discounting, which is where you factor your invoices, get paid up front for most of the value, and we'll be talking about that in more detail later on. So the second major area, what if it goes wrong and your customers are getting behind on payment? Well, the first thing is, don't ever be afraid to ask for the money. You have sold them something, whether it's a product or a service. They owe you the money, that's it. They should pay for it, and you have every right to ask for it. Always be polite and never ever lose your temper. Make sure you keep a record of each phone call or contact you make with them, because you may use email as well, of course. And certainly be firm on your payment terms, and if necessary, put a customer on stop. Now, that doesn't necessarily mean you stop selling to them, but it does mean that if you do sell to them, they have to pay you up front rather than having credit. And also, overall, ensure your invoice figures are accurate. People using excuses such as there's a small error on the invoice is often one used to extend payment dates by, up to a month or more. As a last resort, if you really think it's worth it, if the debt due to you is big enough, then you can go to a lawyer. But it's something you really want to avoid because it can be very expensive. It is not just about, making late customers pay you the money. It's about a whole policy. It's about how you manage the whole aspect of your customers, of your debtors. It's a whole part of managing working capital. You need to do it proactively. So set your policies, make sure your T&Cs are right, make sure you've got credit references. If you can always insure some of your customers. But it's a continuous thing, not just when things go wrong. And if you have a good credit control policy overall that's managed on a permanent basis, then hopefully you won't have any customers that pay late.